Mastering the art of riding. Massive trends. Most traders fail to capture significant market moves not because they lack skill, but because they succumb to the urge to exit their positions far too early. But imagine if you possessed a systematic method to identify a trend and hold it until its absolute conclusion. In this guide, I am going to reveal exactly how you can manage humongous swing trades and ride entire market cycles using Heikin Ashi candles. Best of all, we will be applying this specifically to gold. This breakdown is dedicated to Depot, who asked, "May you please make a video on how to capture big trends?" Much love to India. Let's dive straight into the strategy. Here is a reality that many traders are reluctant to acknowledge. Nobody knows exactly when a massive trend will begin. Not me, not the major institutions, and not the banks. However, the crucial point you must grasp is that you don't need to catch the absolute bottom, nor can you accurately predict the top. Your only job is to remain positioned once the move begins, riding the majority of the momentum rather than trying to squeeze out every single pip. To achieve this, you need higher time frames and a robust way to filter out market noise. That is where Heikin Ashi candles become your greatest asset. The Professional Swing Trader's Toolkit. To swing trade like a professional, you first need to analyze the daily time frame to establish direction, market structure, and key support and resistance zones. Once the macro view is set, you shift your focus to the 1-hour chart to identify entries using Heikin Ashi candles. These candles are revolutionary because they smooth out the price action, allowing you to observe clean trends without the psychological pressure to close your trade prematurely. Finally, you must integrate support and resistance, as these levels represent the most logical zones for high probability breakouts. Heikin Ashi, which translates to average bar in Japanese, is a specific type of candlestick chart designed to simplify trend identification. They are calculated by averaging the previous period's open, high, low, and close. Specifically, the open of a current candle is the average of the previous candle's open and close. This averaging effect significantly reduces market static and filters out minor price fluctuations. The result is a much cleaner chart where red candles stay red longer and green candles stay green longer, despite small retracements. Furthermore, larger Heikin Ashi bodies signal strong momentum, while smaller bodies indicate exhaustion. Identifying the perfect entry. Visualizing this process is simple. You will often see multiple large green candles that gradually begin to shrink in size. Eventually, you'll encounter a Heikin Ashi candle with wicks on both the top and bottom, a sign of indecision, followed by a color change. The specific candle you are looking for is the first one in the new trend that possesses no wick on the trailing side, no bottom wick for a buy, or no top wick for a sell. This indicates a powerful start to a new trend, which can often lead to massive long-term swing trades. Mapping the daily levels. When looking at gold on the daily time frame, the easiest way to identify key levels is to temporarily ignore the candles and switch to a line chart. Use your horizontal tool to mark areas where price has clearly bounced or flipped from resistance to support. If price cannot penetrate a level, it is resistance. If it finds a floor upon it, it is support. Once these high-stakes zones are marked, you will see exactly where the current price sits. Now, zoom in, switch back to Heikin Ashi candles, and you will notice a trend far more defined than what traditional candlesticks offer. Executing the trade on the 1-hour chart. Let's look at a practical example. If price rejects a resistance level twice, forming a double top, and prints our first no-wick bearish candle, we have a potential entry. Moving down to the 1-hour chart, suppose it is 9 a.m. The bullish candles are shrinking and showing wicks on both ends. You should wait patiently for a bearish Heikin Ashi candle with no wick on top. You enter the trade once that candle closes and simply hold as long as the candles remain bearish. If the trend approaches a pre-marked support level from your daily chart and the candles start turning bullish, you know momentum is fading. However, to confirm whether you should fully exit or keep holding for a runner, check the daily chart again. If you see a massive no-wick bearish candle on the daily, you have the confidence to hold the trade into the next day, significantly increasing your chances of capturing a legendary move to the downside. Your strategic checklist. Before you pull the trigger, ensure your checklist is complete. 1. The daily chart must confirm an established trend. 2. Breakouts should occur beyond daily support or resistance. 3. The 1-hour Heikin Ashi candle must close with no bottom wick for buys. 4. The candle body should be robust, showing clear momentum. 5. Ensure price is not trapped in a consolidation zone. Bonus tip. Use small pending orders just above the high of that no-wick candle so you don't miss a fast-moving breakout. This is where most traders fail. They enter a clean signal and then panic. The answer is simple. Do absolutely nothing. Patiently wait for the Heikin Ashi candles to tell you when it is time to leave. Your exit rules are: exit only when an opposite colored candle closes. Ignore minor pullbacks as long as the color remains consistent. Optionally, you can tighten your stop loss after major swings are formed to create a comfortable trailing stop. You must allow the candles, not your emotions, to dictate the end of the trend. Final blueprint for success. To recap, your step-by-step guide is as follows. Open the daily chart and mark your support and resistance. Zoom into the 1-hour chart to locate your zones. Look for those decisive Heikin Ashi candles with no trailing wicks. Enter with total conviction, do not hesitate, and exit only when a candle closes in the opposite color. For the best results, stick to highly trending pairs like gold, XAU-USD, US30, or GBP-JPY. Avoid ranging markets at all costs. If an asset is moving sideways for weeks, this method will only lead to frustration. Most importantly, utilize alerts and notifications from TradingView to inform you when an opposite colored candle forms. This frees you from being chained to the screen, allowing you to enjoy your hobbies while your trades run. Give this method a try and let me know your results in the comments. If you have a specific question you'd like me to answer in a future video, leave it below. You might just be the fan of the day.